Hello, thank you for joining us. My name is Perla Pekutowski, and I'm here with Family Source Consultants. Our guest today is Sarah Paige from ArtRisk Financial and Insurance Solutions. Sarah has been in the insurance field for the last 10 years, assisting intended parents, surrogates, and professionals with their insurance needs. And she's here today to share her expertise with us about insurance options in the United States for both surrogacy and newborn policies, risks, and costs. Sarah, welcome. Thank you so much for taking the time to join us today.
Thank you, Perla. I'm really excited to be here. It's one of my favorite topics, obviously. I've been here for, like you said, 10 years. So I enjoy being able to talk about maternity and the newborn and how to minimize the risk as much as possible when doing surrogacy in the US.
Thank you for taking the time. And obviously you have put something together for us, so I'll let you take it from here.
Okay, perfect. So I did. I put together just a little bit of a PowerPoint presentation, and then we'll open it up. Perla may have questions at the end to make sure everyone understands everything. So I'll just start. So the first thing that I always like to kind of go through, which I'm not going to spend a lot of time on this, but this is just a surrogacy journey timeline. And it kind of lays out the different steps within your journey and then when to have the conversations about insurance, as well as what types of insurance need to be placed at specific times during the journey. So this is something easily, we can get over to you. It'll be in this format as well, but it really does help hopefully guide the intended parents, the agency, the gestational carrier to make sure that everyone's following a good, safe timeline for that surrogate journey. So we'll move forward. So this is just a little bit about what we're going to be talking about today. So we're going to do an overview of maternity. We're going to go through ACA, short-term health insurance, different specialty maternity, and then we're going to talk about the newborn options for you as well. So we're going to get to it because it can be a little overwhelming and there's a lot of information, but hopefully we can break it down so it makes enough sense that you have good information to move forward. So we've broken it down into 3 different categories, which is like an Affordable Care Act, a short-term, and maternity. And so one of the things to know is that the ACA or Affordable Care Act, that a lot of those employer plans that a gestational carrier might have will be included inside that as well. So potential overall costs, how it works, maternity coverage. So this is just a little bit of, again, a nice little chart, very simple to see what is and what is not done. You'll see kind of the biggest difference is going to be the enrollment period. So ACA has a very specific enrollment period. Employer plans are the same way. So insurance on the open market is what we call it, meaning any private insurance in the United States is going to follow some enrollment periods, okay? And they also will contain networks. They absolutely cover maternity coverage, and they will allow for a GC to be pregnant at the effectuation date, which means the date the policy is considered active and you can use it, which is great. And you'll see that, again, no maternity, no infertility coverage, but that there is some coverage for non-maternity, okay? And one of the things that I always like to look at is kind of the cost, like I'm gonna go skip down a couple lines, but looking at the cost of it, because most of those ACA or employer policies are between 12 to 18,000, and sometimes with employer policies, which means that they get it through their job, and not every gestational carrier's employer policy will work. So we always vet those first. But if they do work, a lot of times they can be less than that 12,000. So it does just kind of depend on, again, what's available, what they have, where they live. But that's the range. And then the other really nice thing to know about either, again, an ACA employer type policy is that there's no coverage limit. So that's something that with the ACA, which is the Affordable Care Act, and I'll go a little bit more into what that means, is that they have no limit of coverage, meaning you're not going to get capped on anything, okay? What you want to look at with the short term and the maternity only is that there are caps on those. You'll see with the short term, it's up to 5 million. And for the maternity only, it can be up to 1 million, but the average is between 250,000 and 500,000. And what that means is that they will only cover medical expenses up to those maximums. So again, Affordable Care Act employer doesn't have a maximum. Short-term has a maximum, but again, it's up to about 5 million. And then the specific maternity only policies are going to typically cap between 250 and 5, but you do have $1 million option for an increase in price. Okay, so we're going to go through, and this will be broken down even further as we go. Again, this is just kind of a quick overview chart so that you could reference it and see kind of a good side by side for the three. Okay, so we'll go through. I just also wanted to just really quickly, this is kind of our average maternity cost, and I wanted to let you know that so you can kind of see one of the reasons why some of the policies are expensive is because these are actually the maternity costs from normal commercial health, which is your ACA and employer, and also the Lloyd's of London, which is your maternity only policies. So when you have these, you're going to see there's different amounts that are charged, but ultimately you'll see the average pregnancy is right around that 20,000 to 21,000 mark, okay? So it's really important to understand that, because when we go into the pricing of stuff, you'll understand then why some of these policies are a little bit more, okay? Because again, the cost of maternity is not that low, all right? So we're going to move into the Affordable Care Act. And I just want to, this is always a question I get, which is, what is ACA? What does it stand for? Some people call it ACA. It stands for the Affordable Care Act, and it's actually a law. So a lot of people will ask, well, can I get a non-ACA plan? And no, because it's a law within the United States. So every policy within the United States that's individual, that's on, again, the open market, is going to fall underneath the ACA. And another coined term was Obamacare. It's also called individual coverage. So I just want to let you know that ACA does have those couple different ones, but it is a law. So a lot of people don't know that. They don't know that it was a law. They hear Obamacare and think it's a specific policy. It's not. It's a law that rules or dictates those types of policies and how they have to act, okay? And then the big thing to know too is that the policies are full comprehensive, which is very, very different. So when we get into the short term and we get into the maternity only, they're not going to be full comprehensive. And what I mean by full comprehensive is that they are policies that if she were to, the gestational carrier, if she were to fall and, let's say, stub her toe or break a toe, or I don't want to say anything horrible, so we'll go with break a toe because that's pretty easy to fix. That policy, the ACA policy, the Obamacare policy, would be able to cover that as well. Whereas some of the other policies don't cover non-maternity related. So I guess that's the best way to put it. This covers also non-maternity related expenses. So that's what we call comprehensive coverage. And then got advantages, the cost is lower, there's no pre-existing condition clauses, and it's a quick and easy enrollment. So enrollment on this, honestly, but when we pick the plan, is about 15, 20 minutes for the gestational carrier, and then she's in there. It's fairly easy. Disadvantages, of course, is that there's a very specific time that you're able to enroll, and the time frame for enrolling is usually November 1st through December 15th. There are some states that go a little bit later, but not a ton. California is one of them, Colorado, Pennsylvania, Nevada, Washington extended. So there's a couple states that do extend, but most of them out of our 50 do not. Okay, so November 1st, December 15th is pretty much your sweet window for being able to get this type of policy. And then also they all have contracts with doctors and hospitals. So that's a disadvantage because some of the other insurances, which we'll go through, don't have networks. And so it's very open to whom you can see. I'm going to show you a chart, or not really a chart, it's a picture that I created for ACA in the states that are really safe and the states that kind of get a little crazy for ACA, so that you'll know good states that are there. And hopefully, if you know you have a gestational carrier in that state, you'll know that there's going to be good options if we're looking again at the Affordable Care Act. One of the disadvantages too is that the ACA policy, the Affordable Care Act policy, Obamacare, can change every single year. So every year we have to review these policies and make sure that no language has changed, because again, they're not specific to surrogacy, they're specific to maternity, and they cover maternity. It's just that we have to make sure there's no exclusion. So I'm going to move on to the next slide, which will give you a better kind of overview of the states, okay? So we actually have a lot of green, which is beautiful. You'll see that the little state down here, Louisiana, I'll run my cursor over it, doesn't have a color, and it's because for 2 years running, we haven't been able to get policy booklets. So I can't tell you if it's good or bad. Historically, I've had one policy that was good, but in the last 2 years, they've been very tight and haven't been able to release their booklets to us. So that's why it's white. The dark green is good, meaning we have 3 or more carriers in that state that cover really well. The middle green means that we have 1 to 3 carriers that are good in that state, but it's still full coverage, meaning that we have in every county something that is green and good to go within that state, okay? And then the lightest green means that we have full coverage, but we have some caveats. And so sometimes a lot of it has to do with network and doctors, where the networks are really tiny. And so you only can see specific doctors or hospitals if you go to this, if you want this good insurance. There are other insurances available, but maybe they don't cover surrogacy. So that's why they're lighter green, because again, there is full coverage in the state. We just have to be careful with who you're allowed to see, who the gestational carrier is allowed to see, where the gestational carrier is allowed to deliver. We just have to be careful with that. So we do provider checks and we make sure everything stays within the contract so that you get the full benefits of that policy, because you'll see mostly in all of your contracts, it'll say the gestational carrier cannot go out of network. She needs to pick in-network doctors, and in-network means that they're contracted, and that's how you get the best rates, and that's how you keep your cost contained, is making sure that gestational carrier stays in the network. And again, so then you'll see all the green, the lighter green, that's where it is insanely important because it's very, very specific. The darker green is actually very broad and it's a lot easier to work with in those states. So you'll see that. The orange is ambiguous. So specifically, my orange states are North Carolina and Delaware. And North Carolina actually has some very great green options, but they're only available in very specific regions. So I don't have full state coverage in North Carolina, which is why it's orange, because I do have a policy there. It's just ambiguous, meaning that we haven't been able to fully define how they handle surrogacy. So we don't like to use it, of course, because there's risk involved with that. So that's why I said that state was orange. For California and Oregon, I did yellow, and they are 2 different shades of yellow. So Oregon, all the policies in Oregon carry a form of a lien, okay? And in California, statewide, there are lien policies, and then in very specific areas, you'll be able to get a policy that we call green. And green means good to go, no lien, no ambiguous language, and a lien, because I know that's a different term. So let me explain lien. So a lien is a way for an insurance company to reimburse themselves for the medical expenses. And it sounds crazy because what they're going to do is they're going to say, okay, great, we paid this on your behalf. Now you're going to reimburse us. So a lot of intended parents look at it as, oh my gosh, do I even have insurance because I have to pay this back? And the reality is yes, because your amount is still capped on how much you can pay back. So if you had bills that were $100,000, you would still be capped at approximately, let's say, 20 to 30,000. So yes, you're still capped on that. It's just a higher amount. Then you do have to reimburse them. And typically that cap is based off of the gestational carrier's compensation. I'm not going to get a crazy ton into the liens because it gets really specific and most of you don't have to deal with that. So when we deal with it, we'll have the one-on-one conversations and go through what that specifically means for you and the carrier, because each carrier has different language. But I just wanted to let you know, lien means like a reimbursement back. And then my only state that's an absolute no is Wyoming, which the surrogacy laws are not super friendly in Wyoming anyway, so that shouldn't be a huge issue. But that state definitely is a hard one for us. We don't have one, I don't have a carrier. I have not had a carrier for the last 7 years that covers in that state. So that's a little different. It's my only one. And okay, so that's ACA. We're going to go into short term. So short term is specifically designed for healthy individuals, which gestational carriers are considered healthy individuals. They've been screened, they're ready to go. And they are looking to get something to cover them prior to being able to jump on an Affordable Care Act. So this is kind of like what we consider a bridge policy. We don't want to deliver on this policy because there's not going to be full comprehensive coverage. They only cover complications of pregnancy, but they do cover complications of pregnancy, which is the great thing. So that means that if there is an opportunity to get this, again, later in the year, not something we would do through March or April, but let's say May, June, July, August, September, October timeframe, this is something we want to look into because it's actually a lot less expensive. Number one. Number two, it covers the complications. The thing with it is that you do have to pay normal maternity costs. So like when she went to the OB, the obstetrician, you would have to pay cash for the obstetrician because again, they don't cover regular maternity, they cover complications of. So it's nice because it's there to, again, as a catastrophic, cover complications, but it's not full comprehensive. The other thing too is it's not available in every state. So this is the map that shows you where it is available. So you're going to see there's some major players in our states like California and Colorado, which are major players. And the surrogacy game, they do not have short-term policies. So those aren't an option in those states. And you'll see also going into New York, Maine, a lot of those upper East states don't have it either, but there are some good options in others. Illinois, of course, is a great option. Texas is a great option. We've got Florida. So there are some wonderful short-term policies available. And again, not for full maternity, complications, and definitely getting it in that May, June, and beyond range, because the goal is to get you an ACA policy so the gestational carrier then is covered for that delivery. That's really, I mean, that's where the bulk of that maternity expenses are. So that's why it's really important that we do that, okay? And again, any other questions, we can throw that out there. So then these are, I'm gonna go through this. So there are two other policies that can be used that I consider as specialty maternity, okay? And what that means is that they're run through the Lloyd's of London market, and they are specific to surrogacy. They are written absolutely for surrogacy. They have broader provider access. So a lot of the ACA plans, like I said, you have to be contracted with them. So a lot of their networks are tiny, but this actually has very broad provider access. They can be inexpensive on this specific one, depending on how you use it. And then you also have year-round enrollment. So you can enroll in these at any point in time. No money is due until there's a confirmation of pregnancy, which is nice because the other policies you have to get earlier on. And then disadvantages of this are going to be that it can be expensive, and I'll kind of show you the ranges in the next slide so you can see the low and the highs. They do have pre-existing condition clauses in there, which potentially could be an issue. They are subject to balance billing, which balance billing means that there are items that may not be covered that then you would have to pay. And then there are certain limitations on coverage, such as these policies only cover 6 ultrasounds. So anything above 6 ultrasounds would not be covered by the policy and may be an added expense to you. So they're not actually as broad of coverage as the Affordable Care Act would be, which is why a lot of people will wait if they can, or we'll put in that short-term policy and then move over to the Affordable Care Act policy. But these are available because, again, California, Colorado, New Mexico, New York, coming up, not yet, but coming up very soon, allows for that, okay? And then also they may have network still. So this one's a good option, again, for very specific situations. We tend to use these specialty maternity policies more as a last resort because we would love to see the savings for you guys, and the risk levels aren't any different if we go with something else. So we really like to see these used in very specific circumstances where we don't really have other options, because we find that the high end, as you can see, is going to be into that 32,000 range, okay? And then the low end could be 20,000, it could be 14,000. And the reason why this one's a little different is because it's going to be coupled with cash pay, which sounds crazy, but you get the insurance and you pay about 5,000 up front, and then the insurance holds, and then you cash pay. So whatever you have in terms of medical expenses, every time she goes to the doctor would submit a bill, and then then escrow would pay the bill, and it gets counted against the overall amount. And so once you hit about 27,000 in medical expenses, then you can activate the policy, meaning you can invoke the policy, and then the policy will cover the remainder of expenses. So that's why it can be lower, because you're paying a very small amount up front than you're cash paying. So if you don't hit $27,000 of medical expenses, then you don't have to invoke the policy. So it's a way to make sure that you have a cap on your amount, but also potentially reduce your overall exposure of having to pay so much. Okay, so it's kind of a nice marriage between cash pay and having insurance, because I will tell you, I will never, ever, ever, ever recommend only doing cash pay. You have, in my opinion, you have to have insurance because those medical expenses can get very high very quick. So this is a nice way to be able to control some cost, but understanding that you still have a very high, not very high, but a high cap, a $32,000 cap on this. Okay, so then the next and kind of last one on the maternity is going to be the primary. And the primary means that we're not going to use anything else. We're not going to cash pay. We're going to go directly to the Lloyd's market and say, I want you to handle all of my bills, and I just want to pay you. So we're not looking to couple policies. We're not looking for anything different than that. We're just saying, I don't really care what I have or what she has in the background. We're just going to use you, Lloyd's market, to cover our maternity expenses, okay? And again, advantages, year-round enrollment, money due upon confirmation of pregnancy, specifically written for surrogacy. Disadvantages, higher cost of insurance. We'll go to the next page so you can see what that looks like. Money is due upfront. So that's kind of a big thing, is that it's not a small amount of money that's due or a monthly amount that's due. You're going to have a large chunk that's due upfront. Positive about that is you're not going to have a large chunk due at the end. So you're just doing it at a different point in time. You're doing it sooner and upfront versus on the back end. So again, depends on who you are, personality, and what else is available and what you feel comfortable with. So let me go to this one. So this is where you can kind of see those prices, okay? So for a singleton, high end is going to be 31, low end 29. And why it's 29 is because everything's due up front. So there's no option of potentially doing a cash pay and getting a reduction in rates and that like that. You're going to pay everything up front. So again, low end 29, high end 31. That has to do with between the 250 and the 500,000. If you're wanting the $1 million worth of coverage, you're going to see an additional increase of premium of about 5,000 on the policy. Okay, if you want to go up to that $1 million worth of coverage. And then for the twins, you're going to see that changes. It's going to be 40 to 48,000. So again, it's going to be a lot higher than the singleton, of course, because there's more expenses and there's more potential for higher medical bills with twin pregnancy, more complications potentially. So that's why you're going to see the difference there. So that's going to be the high end 31, low end 29, high end 48, low end 40. Perla, I am done with the maternity part of it. Do we want to ask maternity questions? And then I'll go into the newborn aspect of it, or I can just go newborn.
Thank you. Yes, let's cover. There is so much to cover in here. So I want to make sure I don't ask the same questions that you already covered. So some of the questions that have been submitted to me in advance by my colleagues, because they get these questions often from the intended parents. For example, if my surrogate has her own insurance, what are the odds that her policy would cover surrogacy? So how often do you see that?
So this is a great question. So we find that if the policy is through an employer and is not self-funded, and I will explain self-funded, we find that the percentage of coverage is probably in between 75 and 80. It's actually a pretty high percentage if they're not self-funded. What self-funded means is that the employer owns the policy, not the insurance company. So the employer gets to dictate what they want to cover and what they don't, which potentially can be an issue. So that is where we find that they potentially will put in exclusions, or they will interpret language differently than how the insurance company would. And an employer gets to do that. They reserve the right to do that when they own the policy. And that is what self-funded means. It means that the employer is funding that policy themselves, and they're not looking to the insurance company to pay anything. So that's why they get to dictate, they get to say what they want covered and what they don't. I would say on an employer policy side where it is self-funded, it's probably about a 60% that cover and 40% that don't.
Thank you for that. So for those ones that do have insurance that is surrogacy friendly, what is the cost difference between purchasing a policy and using a policy that the surrogate already has?
Yeah, that is such a great question. So a lot of times, because you're not, when a surrogate has her own policy, the one thing that you don't typically have to pay for are the premiums, because she already had that policy in place. So it means that's an added, most premiums are about $600 per month. So that could be about a $600 savings every single month for you, because she doesn't have that. I would say that most of the time, the surrogate policies we'd see between maybe 4,000 to 8,000, depending on their total out-of-pocket maximum, which means the total amount that you would have to pay on a policy, not including premiums. But because they don't have to pay the premiums, typically, again, with the way the contracts are worded, they get to save that money on premium. When they have to buy a policy, they have to pay that premium on top of that out-of-pocket maximum, which then adds to that cost. So again, I would say average, probably about a $600 savings per month for most intended parents by being able to have a gestational carrier use her employer-based policy. I think it's significant. It's a unicorn sometimes, but it is significant savings.
Yes, well, thank you for sharing that. And you have covered mostly everything that I had in question, so you can go ahead with newborn insurance.
Okay, let's do newborn. Okay, so newborn insurance, I tell everybody this. So a lot of people have their own insurance, and even, obviously internationally they do as well. You work for companies and you may have coverage in the United States. You may have coverage that spans across the globe. So I always tell everybody, every intended parent, no matter if they're domestic and or international, you need to check your insurance first, because a lot of times they don't cover, but if they do, it can be a very significant savings for you. And that's why I think it is really, really, really important to check yours first. I say usually check upon matching. And the reason why I say upon matching is because you need to know where the surrogate is living. Okay, you need to know what state she's in. And then you also need to know what hospital potentially she's going to be delivering at, so that you can check to make sure that with your insurance, again, this is if it's your insurance, that you're checking to make sure that that hospital is considered covered by your insurance. So there's a couple factors of it. Number one, does it cover in the US? Okay, can you even get coverage here to cover the baby, singleton or twins? And then number two, where does it cover in the US? What hospitals do you have access to? Okay, because that's going to be really important, again, to make sure that we look at the total risk exposure and what potentially you're going to be paying for those newborn costs. Because I will tell you, the newborn cost easily can be one of the most expensive costs in the entire journey, sometimes exceeding, depending on how long the babies are in the hospital, exceeding the actual cost of the entire journey. So it's really important that we look at that. And then if for any reason yours doesn't, then we get to go through the other options to make sure that we have some form of coverage for them, okay? So we have kind of 4 different options. We've got Allianz, which a lot of people know about. They're a little bit restrictive. So number one, it can be used in any country except China, Australia, Ireland, or Switzerland. So if you're in any of those countries, we can't do it. And then also it's only for a singleton, which is a huge deal because, of course, if we're doing twins or anything of that nature, Allianz is not an option, okay? And then for Great Morning Newborn Plan, which was formerly Zyban. So most of you at this point in time won't know the Zyban because Great Morning's name has been out for over about 8 months now. So they did rebrand a little bit to make it a little friendlier towards everybody. So not just the Chinese intended parents, but everybody, because it actually is meant for everyone. So they wanted to make sure they had a very friendly name. And then that can be used in any country except for Switzerland. I know that a lot of ours just won't cover in Switzerland. I don't have the exact reason why. I have nothing against Switzerland. I think it's a beautiful country. I loved my time that I spent there. Amazing mountains. And it also can be used for singleton and twins, which is really nice. Then you have the Lloyd's of London plans, which there are 2 different insurance companies, which is New Life Agency and Universal Family Agency, that offer this type of coverage. It can be used in any country, so they don't have a country block. And then also it is only singleton as well, okay? So when we look at these, Really, the only thing that's going to do twins is the great morning, which I will explain a little bit more about on the next slide. And then for cash pay, this is always a tough one because for the singleton side, the cash pay is sometimes used, but a lot of people do get insurance because the insurance you'll see isn't that expensive for singletons. The rate of potentially being in the NICU is a lot lower. It's between 4 to 5% of NICU time. Most babies are born not needing that. Twins is different. Twins is a little bit over 50% end up in needing some form of NICU time, whether it's 3 days, 2 weeks, or more. There is some time there. So it's so hard because when we go to the next slide, you'll see financially twin insurance is crazy, crazy expensive. And singleton insurance is really cheap, but most people get the singleton insurance and don't get the twin insurance, even though the risk on the twins is so much larger, but the cost on the policy is so much larger. So let's move over to that so we can look and see what that looks like. Okay. So here's my little chart for all the different options. So we have the Allianz, and again, pre-birth order, post-birth order, we don't need to get crazy into that. That's just how the state runs and whether the babies are going to be, the birth certificate's going to be yours right away, or if you actually have to file after the birth to gain your names on the birth certificate. Most places we really strive to do the pre-birth order. It's a lot more seamless. But again, this goes into legality. I'm not a lawyer, so I kind of stay away from that. But ultimately, there are two different ways. But you'll see that all the policies, it doesn't matter if it's a pre-birth or a post-birth. We just sometimes get those questions, so I threw it in there. And then we have singleton and twin. So again, you'll see the Allianz, great for singleton, but not for twin, okay? And then the cost is 4 to 15, and I know that's a big range. So let me kind of break this down. The Allianz policy, because you have to get it, you'll see when the data placement is upon match. You have to have this in place 8 months before you can use the policy. So because you have to have it in place 8 months before you can use it, and the point of the insurance, of course, is to make sure we cover early births or something that happens, you're going to be getting it around the time that you match with a gestational carrier. Well, that's a lot of time before the actual transfer happens. So you don't know if that transfer is going to take. You don't know if it's a singleton or twins. You don't know how long legal is going to take and medical clearance. So you kind of have to get this really early on. And that's why I say 4 to 15, because you may have it for only 1 year, or you may have to pay for another year. So the 15 is really is an additional year is how I would look at it. That would span 2 years if we're up into the $15,000 range, okay? 4,000 is probably more standard between the 4 to 6 for a year. I've seen them upwards of 8, but again, that's based on the intended parent because these are written in the name of the intended parent, okay? And then for great morning, you'll see that, again, singleton and twins. Great, I love it, but you're gonna look at the cost. So we're going to see that with the singleton, it's around 10,000, okay, give or take, and twins is around 90. That's a significant difference, and that's about a real number. That is based off of the kind of the average cost in NICU for twins. It's around 125,000, 150,000. The 90,000 is based off of those numbers. You do not have to pay 90,000 up front. So that's the good news. That's not how it works. You pay 14,000 up front, and then you pay percentages of the bill, which is about 20% of the bill. Okay. So again, not that much up front, but if there are complications, if the babies are in NICU, then we're going to need to have those funds available to pay those providers. So that's something to note, is that if that's an option, if you're looking to do twins, then I stress having insurance for twins just because of the craziness that we've seen. And if we have that twin coverage, then you have to have those funds somewhere where they are accessible. Okay, again, upfront cost is not that bad, 14,000, but you have to have those funds available on the back end. And then you'll see coverage limit. So coverage limit, again, we're going back to that ACA terminology and that maternity terminology. How much is the insurance company going to cover for you? So on these policies for Great Morning, on the singleton side, you'll see they're willing to cover up to 440,000. And for twins, they're only willing to cover up to 220,000. Now, that's kind of crazy. Why would twins be less? That's because the risk is higher. Again, the risk is higher. So the insurance company says, how can we cap it? we've done a lot of studies on the singleton side of what an average singleton is, and the average singleton is $2,600. So that's why they don't mind going up to 440,000, because the likelihood of even getting to that number is so low. So we call it a gimme benefit, a feel-good benefit, because the reality is you're probably not going to need that. It's there, but it's such a rare occurrence that the insurance company feels okay giving you that extra money, because the likelihood of ever needing it doesn't really exist. So we call it a feel-good. It's just a feel-good benefit. The other thing that's great about the Great Morning, and you'll see this, is that you can actually place it, well, they won't allow you to place it earlier, at the 12th week of gestation, which means we are in a very good spot. We've gone through the 8 weeks, we've gone through the 10 weeks, we're released from the RE, we're typically at the OB right now, or right around going to the OB. And so we're in a nice spot for the pregnancy, which is always great. So that's where Great Morning varies a little bit, is that you don't have to get it so early on. You can get it later. Yes, the cost may be a little bit higher with less coverage, right? So you kind of have to weigh that and say, what's going to be the best for me? And, you know, there's no perfect newborn option. I can tell you that. There's nothing that's perfect in the newborn world. So we want to just think of what's the best possible option for me. And then for the Lloyd's of London policies, again, we have 2 different options. They're going to range between 20 to 35,000. The coverage cap on those is going to be 100 to 250. So again, a lot less coverage, a lot more money. Most people don't move forward in this direction because there's not a reason to do that. And then we have, you can get it the confirmation of heartbeat through the 32nd week. So again, you can wait a little bit longer, but it only covers singleton. So you'll see singleton only, twins no. So that's, you know, the Lloyd's of London. Again, that one's not a big option for most people because the cost is higher. And again, the benefit is lower. So most people don't see why. And I agree. So I think there are the better options, hence Allianz and Great Morning, but it's there. Absolutely, it's there. Some people like it because of the name. Lloyd's of London has been around, you know, gosh, for hundreds of years and is a wonderful company. So I get it. Sometimes it's just the name that they want to be able to go with and feel secure. Understood. Absolutely. And then the last one is the cash pay. So the cash pay, again, I'm not super keen on it. For singleton, I don't think it's as bad just because the risk is so much lower. For twins, it scares me, to be perfectly honest, because there's no cap. You're going to see there where it says the cost and then it says coverage limit. There's no coverage limit. Whatever the bills are, and that's what you need to pay. So if we can get some form of insurance, of course, on my end, that's what I do, right? So I'm always going to be on the side of caution and say, let's get you something. Let's make sure you're covered in some capacity. If we're going to do cash pay, I don't like it for twins. Again, there's just so much risk involved with that, potential extra expenses. For singleton, I do feel a lot differently for that. I think the singleton insurance is pretty inexpensive. So personally, I would just probably get it, but I understand cash pay a little bit more from that side. Because again, if we're talking about a 4% risk, it's not as crazy as a 50 or 49%. So that is, that's everything. That's us. And so, Perla, I'm happy to answer any additional questions about the newborn that you guys usually get or that your staff gets.
Thank you. And I want to invite our participants to submit their questions in the chat. In case you're thinking about something that you want to ask, please feel free to submit that. Looking at the numbers, Sarah, I don't know why anybody would go for twins, for international intended parents.
Right.
What is the worst that you have seen when it comes to expenses for twin delivery, for twin babies?
Oh, in the millions. I mean, honestly, that's rare. I would say average NICU on most of our twins is sitting about 250,000. So I think that's fairly significant.
Yeah. So that is really, really expensive and really risky.
Yeah.
Now, I know in the past, you know, because the babies are born in America and they are American citizens, we were able to get ACA policies for those babies. And I know that's not the case anymore. Do you see that as an option in the future?
Not with the Affordable Care Act. So the Affordable Care Act has language about having a residency here, and the residency goes back to that of the intended parent or the parent at that point. And so unless they can claim residency on like taxes in the United States as a resident, then no. And then again, that's the Affordable Care Act language, that's legislation. So unless that portion of it goes away, or unless they come up with a different law, it won't change, because again, it has nothing to do with the citizenship. It goes back to residency and where you reside.
Well, that's good to know, because we get that question very, very often, and because it was used in the past.
Yes.
Many intended parents are hoping that they could do it now.
Yes.
They have friends who have done it.
Yeah, absolutely. And it was. And so it's so interesting, because the language has never changed since the Affordable Care Act came into play in 2010. So it's actually been this way for 11 years. The difference is that a lot of people didn't read into it, and thought that there was some gray area because of the citizenship aspect of it. Again, there's like the citizenship, of course, but then there's the other aspect of the residency. And some people thought the residency only applied towards certain plans, not realizing that every plan that's sold is considered an Affordable Care Act plan and follows those guidelines. So a lot of it was just, let me tell you, the Affordable Care Act is like 10,000 pages. So it wasn't, when everything switched and changed, there was just a lot of things that people didn't know. They didn't understand. They didn't know. The attorneys were trying to figure it out. I crossed my fingers, and I'm so happy that a lot of them worked at that point, but now we know better. And so since we know better, we have to follow the safest route for the intended parents, which is following the ACA Affordable Care Act language.
Thank you. And in regards to the alliance policies, you have to pay very, very early upon match. Mm-hmm. What happens if that match doesn't move forward?
Yeah, so the alliance policies only give you 30 days to cancel the policy and get a refund. That's it. So if it doesn't move forward, then yes, that could be a potential. I would say you don't have to do it right when you match, but let's say that we're, at the point of signing legal. Okay, sign legal and then move forward from, get it at the signing of legal. If you do that, you may want to press the actual med start date out a little bit further, because you just want to get a little further, because you want to have those 8 months, covered by you before you're going to potentially need that insurance. You want to have that insurance. So you've got to get far enough into that pregnancy for it to make sense to purchase it. So definitely, you can wait a little longer and wait to purchase it again after legal's done, so that match feels more secure. But then I would say you're going to need to push out transfer date a little bit further than the normal course that you would follow.
Sarah, this has been so helpful, so informational. I am sure the intended parents are going to benefit from watching this. I'm going to make sure to send the link to the insurance webinar. Your time and for sharing your knowledge, and hopefully we'll have more options in the future. I know a lot of intended parents want to try for twins, yes, especially on same-sex couples, and I hate to scare them.
I do too. I think that's what's so hard, is that we're not in the business of scaring. That's not the purpose. We are in the business of making sure that everyone knows their risk level, and that's what it is. And numbers, to me, I'm such a numbers person. Numbers are numbers. So I would love everybody to have twins. It's just there are additional fees that come with it, just additional risk that comes with it.
Well, thank you so much, Sarah, and until the next time.
Wonderful. Thank you for having me. I appreciate everyone coming and listening.
Thank you, everyone. Thank you.
Right, thank you. Have a good one.
Bye-bye.